Hello and welcome to another episode of your property podcast. My name is Michelle Cairns from YPN, and here with us today we have got Lewis Crompton. Hi Lewis, how are you?
Hello, Michelle. Very, very well, thank you. Although the weather has definitely turned here in the UK, so I'm putting up with the cold, but I've got my heater on, first time in a while. So yeah.
Oh, well, we're recording this mid-November here, and yes, I don't mind. I don't mind the cold, as you know, if there's Christmas lights and the
That's true.
festive atmosphere. That's not too bad. It's it's January and February that I'm not too keen on,
Yeah,
so I don't
yeah.
mind this.
When all the good stuff's kind of happened, and now we've got to get on with reality. Yeah.
Exactly. But no, it's great to have you on with us today. And I know that we've done some work with you, you know, from the YPN side. So some of our listeners might be familiar with what you have done, might be attended one of your free web classes, for example. But for those of listeners who don't know, Lewis, you're the founder and CEO of Star Trading, and you have been in trading in the financial markets for nearly 10 years now. But do you want to just explain about how your experience and your expertise in trading relates to property and how you have worked with property investors to help them build their portfolio, I suppose, using the profits from trading? So a bit of an unusual angle. It's not one we've really covered on a podcast before.
Yeah.
So let's dive in.
Yeah, brilliant. So, I mean, that's a very broad question. So it's given me a lot to work with there. I think one of the good ways to think about trading when we're talking about trading financial markets in partnership with property, which is very much how I see them in terms of a symbiosis. I am a property investor as well. I've been trading now for over 10 years, and I use that capital that I generated from from trading to go into property investment. So I've been investing now in property for probably about 7 years, which feels crazy that I've been around the block for that longer time, no pun intended. So yeah, the interpretation, or rather the expectation of what trading is often very different to what I see it as a reality. People have all these preconceived ideas that it's very fast-paced, angry, buy, sell, shouting at people and things like that, like you see in the movies. And it's not really that at all. It's individuals in front of their computer screens with the way that I teach people, 30 minutes a day maximum, when they know what they're doing. In your learning phase, you may want to spend a little bit longer, but once you know what you're doing, it's 30 minutes a day in front of your computer, again, anywhere in the world, making informed decisions based upon analysis, based upon systems and strategies. Like we have in property investment, we have to have a system and a strategy in place. The same way we approach property markets, we approach financial markets as well. So we make sure that we are taking really good quality trades. And so for me, I see very much a symbiosis, because we do work with a lot of people who are also property investors to generate capital for deals. Whether they've been investing in property for a long time and they've maybe come to the end of their own capital, they don't like the idea of OPM, which is always thrown out there, like use other people's money, it's fine, it's not a problem, it's nice and easy. Oh yeah, it's so easy just to raise money from friends and family, and then the stress and the pressure that comes from that. Most property investors, I think, if they're honest, would much rather be using their own capital to invest in property. And I'm falling into that category as well. I've done angel finance, I've done bridging finance, I've done all of those different styles of funding. And my favorite one by far is always when I am able to use my own capital. I just feel like there's less stress attached to it. So that's what we tend to do when we're working with property investors, is they're very much looking to grow their trading account to then use it for property investment. And the best thing is if they learn how to trade and they're UK based, it's tax free. So we don't have to give away any of that profit to the government. When you start making your money through your property portfolio, then of course there's tax to pay. But if you're generating that capital from your trading, those profits are tax free in the UK.
Okay. Well, I'm going to guess that there are two camps of people listening to this podcast, and one camp is going to be people who have tried some trading. They know how to trade, they know where to start. They might even be trading at the moment, and they're already sort of on that path. And the other people really just don't. It's not a world that they've ever come into contact with. They might have heard about it, but they certainly wouldn't know where to start. And I have to say, I fall into that camp. So it's all a bit of a mystery to me. So I've got a basic idea of how it works, but so first of all, are people trading to get cash flow? When you say about capital, is that the monthly income that's coming in through, money you make from these trading? You have to excuse me because I don't really know the terminology. Or are we looking to get big chunks that we can then go out and put down on a deposit?
Yeah, really, really good question. It's more the cash flow side, but it grows rapidly. So we are low risk, but we're high reward in terms of the style of trading that we do. And in terms of expected returns on a monthly basis, once our students are up to scratch, they're making anywhere from 5% to 10% per month, if not more. So it is a high cash flowing investment style, but it is really, really low risk. So we would only ever risk, say, 1% of our entire account to get that 5 to 10% growth on our entire account on a monthly basis, which is why we're low risk, but we consider ourselves high reward. And when we're in a trading position, the reason it kind of falls under the banner of trading instead of falling under the banner of investing is because it's that shorter term. So we are only in a tradable position for a couple of days to a couple of weeks at a time. So we wouldn't buy and hold something for 6 months to 12 months, hoping for a big pot of capital at the end. We're shorter term, which allows us to get those high returns, but still allows us, with the style that we teach, to only be in front of our computers for 30 minutes a day.
Okay, so you mentioned about the return, the ROI 5% plus. How much do you think, so if someone's starting out, how much do they need to put in order to get 5%? Because this is a business like anything else. I imagine they need some upfront capital.
Yeah.
So for people to, make it worthwhile, how much do people have to find?
Yes. So when you're first starting out, and there's kind of two questions in one here, and it's a really good question because, again, there's often a preconceived idea that you need to have a lot of money in order to start trading. And that's actually not true. We work with people who are incredibly wealthy, high net worth individuals. We also work with people who are just starting out on their wealth journey. So very much two ends of the spectrum there. When first beginning to trade, it's a skill set like anything else. Like property is a skill set. That's why we often recommend in property that people start out with buy-to-lets, cut their teeth, and then develop further on, because you need to learn the skill set and understand the principles and the processes and have a bit of skin in the game. So when we first start people out, the maximum we kind of want people to have in a trading account is around about £1,000 as a maximum. You can start with less. So you could start with just 500. You could even start with just £300 if you want to. But again, looking at it as a business, we want to build our confidence, our competence, and our consistency in terms of our profitable trading as quickly as we can. And then once we are those three things, those three C's, confident, competent, and consistent, then we can increase the amount of capital that we have in the account. So starting off, you don't need a lot whatsoever. And then once you know what you're doing, the sky is the limit, and we can grow it from wherever you start to wherever it is you want to get to. And that's again why we encourage people to think long term, because if you are making 5% to 10% per month, you actually only need to be making 6% per month compounded and consecutively, or rather on average over a 12-month period. And if you hit that 6%, which is the low end of what we are having our students aim for, then your capital in your trading account will actually double every 12 months, which is fantastic and phenomenal. Isn't going to happen on day one. I always want to caveat that. Once you've got the skill set in place, so that is where you can get to and improve upon that as well.
So the idea in that scenario is that you leave the profit in so it compounds over time, right? So you are earning the cash flow, but you don't take it out because you want the compounded effect of the growth.
Exactly. Yeah. And that's what allows us to rapidly grow the trading account, which is what I did when I first started. And that's when I grew my account to the size that I could then start investing in property. Now, I will be very honest, I started investing in the Northeast. So I didn't need loads of capital to begin with, but I started with a very, very modest pot in my trading account, grew that, and then was able to start investing in property, albeit in the Northeast, in Middlesbrough, because of that trading account.
Okay. And when we talk about trading, what are we trading? So what is it like, Apple shares, or what what type of shares? Is it just shares, or are we talking about crypto and Bitcoin and that kind of thing as well?
Yeah, so it depends on the style of trading you kind of choose to go down. The style of trading that we teach is very, very adaptable and very flexible. So you can trade it on stocks and shares. You can trade it on indexes, which are like the collection of largest companies in a country. You can trade it on commodities like gold, silver, and oil. You can trade it on Forex. You could trade it even on crypto if you wanted to. If it's a financial market, technically you can trade it using our systems and our strategies. We would just say, make sure you test the systems and strategies on those markets before you trade them. So I tend to trade a lot of Forex because the market moves very nicely for the way that we trade. A lot of my students will do as well, but we do also trade indexes, stocks and shares. Some of my biggest trades have been on oil and on banking stocks, actually. So not even specific indexes. It's been on stocks. So you really can trade anything once you have the skill set in place.
Okay. And would somebody coming in, would they be better off starting off with like the Fortune 500? So there's like a group of companies together that reduce the risk, or are you looking at individual trades?
Yeah. So again, this is kind of the difference between trading and longer term investing. If you're thinking you just want to do some buy and hold stuff, then you probably are better off. And this is not financial advice, which is the name of my YouTube channel, but you probably are in general, if you don't really know what you're doing, just buying those larger indexes. Or index trackers, we often hear people talk about. They are good to buy for the long term. If you're in your 60s, 70s, though, maybe not the best option, because the long term for you isn't quite as long term as someone who's starting out at 20 years old, to be marginally blunt. You may want to look at slightly different forms of investment, which would give you a return in a quicker period of time, especially when we know the markets are so high right now from a long term perspective. However, if you're trading, then I wouldn't specify you have to focus on this type of market or that type of market. What I would specify is learn the skill set that you could then apply to any of those markets, and then find which one you just quite like, you're seeing a lot of opportunity in, because we're all a bit different on that front, and which is why we teach multiple different strategies across different market conditions, because people will always find the one which is their favorite, but you're still armed with all of those strategies. So when market conditions change and they evolve over time, you can change and evolve with them, maintaining consistent profit over the years.
Okay. Sorry, I feel like I'm bombarding you with questions that are very skeptical here, but they're just, I suppose, beliefs that I've got in my head about why I've not, why I wouldn't have looked at this before. But for example, I've always thought of trading anything to do with stocks as, well, the money you put in, it can disappear overnight, whereas if you put it into property, at the end of the day, even if the value goes down, it's never going to go to zero, because almost never going to go to zero, because you've always got the bricks and mortar, you've got the land, you've got the house, and also you've got cash flow coming in. So unless you need to sell, it doesn't really matter what the value of the house is. Whereas in my mind, if I put money into stocks and shares, that can disappear overnight if that company goes bust.
Yeah, which is completely true if you don't follow a correct system and a correct process. So for example, in property, I bought a flip deal the week before COVID lockdowns happened. That property was then meant to make me £30,000 in profit, end up losing me £30,000 instead, for various reasons, joint venture problems, all of the things which could go wrong in a property deal, right? So I personally have the belief that there's a lot that can still go wrong in property, even if it can't technically go to zero. And for me, the style of trading that we teach at Star Trading, and we talk about and we run people through on our free masterclasses and challenges we do, that is incredibly low risk. And for me, it's lower risk than property, dare I say that. And the reason is because we can cap and control our loss very, very strictly, very, very tightly. So on an entire account I have of, say, I'm just going to use simple numbers for simple math. Say I have £10,000 in my trading account. The maximum I would be risking on a trade is £100. So the maximum I could lose is £100, which doesn't feel very risky, because it's incredibly low risk. Whereas if I put £100,000 into a property or a flip deal, there's potential that I could lose a lot more than just 1% of that, even though it's not going to go to zero, like you say. So it is safe in that respect. There is still the potential for lots of things to go wrong, which could cost me a heck of a lot more than 1% of what I put into the property deal.
Yeah, you're right. It's about the exposure, not about the amount that's put in. Right.
Brilliant. You see, you just said it better than I could have done. It's all about the exposure. And when we teach people how to trade, we are all about mastering the safe way of trading and protecting people. And it's all about keeping their exposure incredibly low. The maximum exposure we would ever have our students operate with is 5% total. And that would be across multiple trades, not one single trade.
Right. We're not talking about either or in this scenario. We're talking about doing the trading so that you can extract the money and then put it into property.
Exactly.
And perhaps you then put it into property it's simpler, that doesn't require all, huge development, 12 months or 24 months of project. Yeah. You just keep it simple by investing in single lets or something that's a bit easier to manage. So
completely, yeah, for me it's definitely not either or. I think I'm very fortunate that I started with trading because that generated me the capital, and I then had the skill set ongoing even when I was investing in property. A lot of our students who are already property investors who now learn to trade, part of what they do is they've kind of adopted my process of what I do. So for example, I was buying a very, very simple buy-to-let last year, and it took 9 months to get this simple buy-to-let through conveyancing. I mean, what an absolute joke. Ridiculous. So it took me 9 months, but the money is sat in a bank account. Traditionally, the money is sat in a bank account waiting to go because it's got to be used as proof of funds. But what did I do? Because I've got the skill set of trading, I had it in my trading account, which is, by the way, FCA regulated, which means it can be used as proof of deposit because it's effectively a bank. So it sat in my trading account, generating me income more than the bank account would. So when it does finally come out of my trading account, in order to be used as that deposit for the property or the purchase of the property, I've already made interest on it, but I've still got the capital ready for the property deposit. So this is why we very much see it as a symbiosis, the two things together. You're making your money work harder for you than you constantly having to work hard for the money. And why not have that deposit working, making money for you, rather than it just sat in the bank kind of rotting away a little bit and not doing a lot for you. So this is why I love the partnership between property and trading.
Wow, that's really interesting. I didn't know you could do that.
Yeah.
Okay, so trading then, it sounds great. Why isn't everyone else doing this?
Yeah.
I suppose is the next question.
Yeah. It's the same. I think it's the same answer as to why is not everybody doing property, because it does require you to have to learn new things, face your own mental and emotional rubbish, because so much of what we do is about mindset and emotional management. I mean, property has caused me the most stress of anything ever in my life. I still believe in it, but it's been a hard old journey. And trading, although it's been an easier journey for me, there's a lot to be said for consistency. It's kind of like everyone knows it's healthy to go to the gym, but does everybody go to the gym? No, they don't, myself included, although I'm trying to get back on it. But it's because it's one of those things which is, especially when you know what you're doing, it's so easy to actually do in that 30-minute time period. It's also so easy not to do. So it kind of falls down the priority list, when actually, if you master the consistency, you master your mindset and your emotions, which is where the tricky thing is. This skill itself is actually not too difficult to learn. Yes, it's like learning to drive a car. You have to get some practice, get some feedback, make sure you're doing the things correctly, you're pressing the right buttons at the right time. But once you've done that, it's so easy. You wonder how you ever didn't know how to drive a car. And that's what trading is a bit like, but it's just a case of getting over that initial learning hurdle to be able to then be that consistent and keep going with it. I think that's why a lot of people don't do it. And there's a lot of misconceptions about trading as well, that it's high risk, that it's really difficult to learn, that you need a lot of money to start. There's all those barriers which people put in the way that actually aren't the case if you learn a really good system like we have at Star Trading.
And how does it work with, because in my mind I'd be thinking, well, all of these AI computers and this whatever fraction of a second computers are actually going to be way better than me sitting there for half an hour a day. So how do you compete with these softwares? I
probably get asked this question nearly once a day.
Well, this is your one for today, right?
There's my one for today. So you tick the box for me, thank you. So and it comes from, I think there's a lot going on in terms of AI and in the world and things like that. I am yet to meet anybody in the world of trading who has used an algorithm or a robot that automatically makes money consistently. I've never, and I've been doing this now over 10 years, just over 10 years now. So October was my anniversary. So last month was my 10-year anniversary. And I've not met anybody who's made any money from robots other than the people who sell the robots. Similarly, if that's a word, I've never met anybody who has made consistent profit from copying somebody else's trades. The only people I know who've made money from that are the people selling those trades. And that's one thing which is very different to what we do at Star Trading, is we're all about empowerment. So we want to empower people to have a skill set that they can have for life. So if, God forbid, I was hit by a bus or my team were hit by a bus and we were to disappear for whatever reason overnight, our students still have the skill set in place, which means they can continue to trade for the rest of their life. It's the principle of give a man a fish, he'll eat for a day, give a man a fishing rod and teach him how to fish, he'll eat for the rest of his life. And that's what we're wanting to do. We're wanting to give that fishing rod so people can go into the markets, they can start generating capital for themselves, that real high level cash flow. If you're in the UK, it's tax-free as well. So it just ticks so many boxes, but it's all about empowerment for us.
And why doesn't it work just to copy someone else's trade? So if you're obviously you've been doing this 10 years, I would expect you to know a lot more about which trades are going to be profitable more than me. So it seems a bit counterintuitive for me to come in and say, oh, okay, well, I like the look of this trade because it's got a nice name or something, but how does that
it's a good question. I'm not entirely sure why the copy trades never seem to work. I think, well, let's say, for example, just out of scenario that they do work. Brilliant, fantastic. So you're copying my trades for a year, you're making consistent profit, you're making money, you're very, very happy, and then I disappear. You're back to square one. And that's what I don't want. That's the opposite of what I want for people. I want them to be continually growing and evolving. I don't want them to be trapped at square one and then having to find the next person, then having to find the next person. So I've never seen it work consistently. And I don't really know why the answer is, but I just never have. It's the same reason with why don't the robots work? I don't know why they don't work. I just know that they tend to work for a couple of months at a time. And then all of a sudden they lose the people using them a heck of a lot of money because they break all the risk rules and things like that.
Yeah, I guess we would have heard about them by now if they worked, right? Because someone would be really, really rich.
Well, very true. Very, very true. Yeah. Whereas we do know that there's people who trade based on their own decision making who are very wealthy, because we do know they exist. It's just harder to crack that code for yourself.
Okay, so I understand there's probably, you could spend a lifetime learning about all of these skill sets involved in trading, similar to property, I suppose. And in property, people can just come in and buy a buy-to-let. It doesn't really take very much. You don't have to be I say, even very intelligent. You just hire a solicitor and you've got some money and you buy a house, right? There's not really much to it. So on the very basic entry level for trading, can somebody come in and just keep it very simple and still make money?
Yes and no. So it's different because with a property in that scenario, you have an asset straight away that is generating you capital. Really, what's generating you capital and cash flow from trading is your knowledge. So someone could come in and have a very good week, have a very good month, maybe even have a very good couple of months. But if they don't have system and they don't have structure and they don't understand why they're performing well or why they're not performing, then it's going to be very, very hard for them to continue to make profit from their trading. I suppose for me, that's when it falls into the realm of gambling rather than analysis and trading and investing, because you're kind of just walking into a casino, except for the casino is the financial market. You're putting everything on black and hoping that it hits black, and you may get that happen 3, 4, 5 times in a row. But then what happens when it doesn't? You have no idea why. You haven't got a system, you haven't got a strategy. You're just hoping for the best. And that one business mentor of mine once said to me, "Hope is not an effective strategy." I was like, "Oh, that's very true." So yes, be hopeful, but have an actual strategy in place as well.
Right. So in the scenario of a casino, really, if you've got a strategy, it's still down to luck at the end of the day, and whether they're kind of not to say it's rigged in the favor of the casino, but the odds aren't really in your favor of winning. Whereas in trading, you come in with a particular strategy, as you said, and therefore how much control do you have over the profit that you make?
Yeah, really good question. I suppose it's similar to how much control do you have over the tenants that come into your properties who could do whatever they do to them. There's always going to be risk associated. However, we do the things we need to do to stay safe and to limit those risks. And it's the same with trading as well. So you can approach trading like an investment, or you can approach it like you're gambling. And I know which one I want to be on, because gamblers end up losing money. Those who are investors, if they're doing it right, should be making profit on a consecutive basis. So in the same way, I could just buy a property and it's actually a bit of a gamble because I haven't done my due diligence. I've not done my research. I could set up a business and that's a bit of a gamble rather than investment because I'm just kind of hoping for the best. I've not done my market research. I've not done this and done that. So all forms of investment will carry that risk. So they will have an element of luck or an element of gambling. But what makes them not gambling, what makes them investment, is systems and strategies and processes and analysis. So just as a brief example, all of the strategies that we teach people, we have tested for a minimum of 3 years, some of them up to 20 years. So we know that they historically work, and we also teach them in a way that allows them to adapt over time as market conditions change too. That is when you're in the realm of investing, not just hoping for the best.
Okay. So obviously you've got the secret sauce that you probably don't want to give away on this podcast, but if there's one thing that you could say about what makes a good trader, what makes a profitable trader, what would that be?
Really good question. So we talk about 4 different personality types in trading and investing, and you can actually be a good trader in all of those realms, all of those areas. I think one thing that I'll pick out for what makes a good trader, or rather what makes a good trading system, because ultimately a good trader can follow a good trading system.
Okay.
But what makes a good trading system is it removes the element of emotion. And so we actually had our trading system featured in Bloomberg and Yahoo Finance and places like that. And what they draw out of it was the fact that our system is data driven. So it's not emotion, it's not gut, it's not moon cycles, it's not anything like that. It's to do with the data that the market has presented. And so if you can follow that data, if you can assess that data correctly, and I'm not a maths head whatsoever, by the way, like I was in the special class for maths at school, but I've learned how to collect the right data and learned what that right data is telling me and apply that correctly to the market. That really is a secret sauce. So what makes somebody a successful trader is their ability to understand that data, apply that data, and follow the system that is created based on that data.
Right, great. And okay, let's bring it back to investing in property. So you get let's say someone starts with £1,000 and they, do that consistently, the trading over 12 months, looking at 5 to 10%. They don't take it out as cash flow, so it compounds. Sort of at what point? Again, I'm trying to work out in my head. At what point would they have, enough to either put towards a deposit? Do you think, is it, a couple of years, or do you need like a larger sum? Some maths magicians are going to be listening to this thinking, oh
those
my
who are
God,
listening who've got maths probably thinking about us, like, what are these two on about?
yeah.
But they probably figured out the answer already to the question.
Yes, definitely. Sorry.
So remember, 1,000 is just where we start off with as a maximum to begin with. Again, someone might be only 500, and that isn't where we'd want to stick and stay for the whole time. Once you know what you're doing, which with our students is anywhere from 2 months to 6 months to be kind of fully up to speed, then it's about what level of capital are you comfortable with. So we've got people who are trading with close to £1 million in their trading accounts, people who have hit the £10,000 in their trading account and they're very happy and comfortable sticking there. So it really is a kind of a personal decision in terms of where you want to get to and where you're starting off with. The reality is, if you can just kind of reverse engineer it based upon 5% to 10% per month. So if you were starting with just 1,000 and you didn't add in anything extra, it is going to take you a few years to get to that point. But that isn't the process we really want you to be following. We want you to start with 1,000 maximum, master the skill set, and then increase the level of capital that you have in your trading account as you grow that confidence, competency, and consistency.
Yeah. So it's really for people who do have extra cash who they can boost their account with to increase the compounding to get the quicker results.
I would say that's one group of person. And again, when we compare ourselves with each other, it's a thief of joy, all of that sort of thing. So if someone doesn't have a lot of capital, learning to trade is probably one of the best things that they can do, because it is going to generate them more capital than putting their money in the bank. They can't afford to do property yet anyway. So why not actually develop a skill set which can increase that cash flow and increase that capital from a smaller amount of capital to begin with? Again, if we think slightly longer term, that's a really, really good play. It's a really good way to go. It's also really, really good for people who do have more capital to play with, or maybe they're sat at around £20,000 and they're thinking, should I put that into a house deposit, or should I do something else with that money? What else could I do to generate an income? I don't know what else to do. Trading for them is also a really brilliant option, because yes, we're going to start with just that 1,000, but then we're going to generate capital. You can use the rest of the capital you've got in of that 20,000 once you're competent, and that's going to generate more for the future.
Right. Okay. Yeah, I suppose my question was, is it still worth people starting if they've really not got very much money? But
yeah,
you've answered that as yes.
Personally, I think it is, because that's where I started. I didn't have any capital to begin with. I was working retail on the shop floor initially, worked my way up into head offices, then started learning to trade. So that is where I started. But if they haven't got a lot of capital, what else are they going to do from an investment perspective? They can't buy a property, which we know is a really safe way to go. They could start a business, but we know how much hard work that is. And also no guarantee of success either. And a lot of businesses require a lot of capital to start with anyway. Whereas trading is a starting point, low capital. Yes, you need to learn the skill set, but it's upfront learning. Once you've got that skill set in place, then whatever amount of capital you have, you can then generate more capital from. So again, from a long-term play, even if you've got nothing to begin with, really, it's a really, really good skill set to have, because it will create the wealth that you want in the future.
And do you see that people, I guess there are some people who start off with the trading, they build up enough of a pot to invest in the property, and then they use the money from the property to come back into their trading account, because then obviously the trading account is at zero because they've used it for the deposit for the house. But presumably when people refinance as well, they pull that pot out back in, and then they go again and build it up.
Yeah,
so they're compounding
exactly,
each stage, right?
And that is one route to property through trading. And that is definitely what some of them have done. What we tend to suggest is you actually build up more capital in your trading account than you actually need for the first property, so that when you take the money out for the property, you've still got trading capital that you can then continue to grow as well. So it's longer in the initial stage, but it's quicker in the overall stage if you do it that way.
And for other areas of business or life, if somebody wants a personal trainer, they're just going down to the gym and sign up with a PT, right?
Yeah.
But if they want to get involved in trading, it's not very obvious where to go and who to trust.
Yeah.
So what does that look like? So if somebody wanted to get involved, kind of how much does it cost to get into it and get started? And what does that look like in the form of support?
Yeah. So there's a general question in terms of the world of trading, and there's price points all over the point. So all over. With us, we do a lot of free stuff. We do have training options that are upwards of 20,000, but you can start with this for as little as turning up to a free event. We often co-host events with an organization called the Swedish Wealth Institute, which is run by a guy called Daniel Wood. And we recently just did a Kim Kiyosaki event, so I got to share the stage with her, virtual stage with her, which was brilliant. That was hosted by Swedish Wealth Institute. But we also have star trading masterclasses, which are free, and 5-day challenges, which are only £20 as well, just to give people a real good taster of what it is we do, how we do it, what trading is, and how it can work for them as well, at a fee which is really, really nominal, so that they can kind of dip their toe in the water and see if it's for them or not. So yes, that's probably from my side, the best way to go. I would highly recommend not just trawling the internet, because there's a lot of information out there which is good, but there's also a lot that isn't very good. And if you don't know what you don't know at this stage, you may be absorbing a lot of information which isn't very helpful whatsoever.
Absolutely. Well, you wouldn't even know what was the good, what was the bad. And gosh, I can imagine that gets pretty overwhelmed very quickly. So obviously we have, YPN, we've worked with you already, so it's great to just be able to signpost people in your direction. And as you say, people can get kind of a free starter entry level web class, and a few of the challenges there. So we'll put links to all of those in the show notes. Is there any kind of final thoughts that we haven't covered that you'd like to mention before we finish?
I think we've covered a lot of ground. Yeah. My hope is that from some of the answers I've given today, that people will realize trading isn't necessarily what they thought it was. And if people would like to know more, they can contact me on Instagram, but be careful because there is a lot of people pretending to be me on social media, or drop me an email, which I'll give to the show notes as well, just so I can make sure you guys are working in the right direction with your trading and you're staying safe out there.
Great. So look out for the blue tick. Yeah.
Yes, well, this one doesn't because my blue tick one also got hacked. So apparently
Oh, no.
it doesn't mean that much. So that's gone.
Well, we'll have the official link in our show notes. So that's the best place to look. So come and look at the podcast show notes. It's also in the YouTube show notes as well. And look out for one of our emails because we are running a couple of web classes with you fairly regularly now. So that's really good. So look out for those. And it's been really interesting. You've answered a lot of my questions or limiting beliefs. So thank you for that. And hopefully I'm sure it's probably what a lot of people who've never really got into trading might be thinking as well. So it's really interesting to have that angle, and great to have an alternative way for people to build up that pot of money. For a lot of people, that's the thing that stops them getting into property. So if trading is for them, then here is another avenue they can get into.
Brilliant. Thank you so much.
Then. Well, thank you for your time, Lewis, and we look forward to helping people get started in trading in the future.